Hi everyone and welcome to Chapter 3's lecture. In this chapter, we're going to look at a different approach to costing our products, jobs, services, and it's called activity-based costing. So our learning objectives are here's our first one, of course, understanding the basic approach to this activity-based costing and how it differs from what we learned in Chapter 2, which is a more conventional costing method. Compute activity rates for an activity-based costing system. So how do we do this activity-based costing? Then compute product cost using activity-based costing. And then contrast the product cost computed under the activity-based costing to conventional. So let's take a look at the first objective. When cost systems were developed back in the 1800s, we kept it simple. We didn't have computers. We didn't have a whole bunch of stuff to help us with efficiency. So cost and activity data had to be collected by hand and all calculations were done with paper and pencil. So most companies produced a limited variety of similar products, so there was little difference in the overhead by each product. However, that's changed. What companies did do back then and what we saw back in Chapter 2 was determine an overhead rate for everything. It didn't matter if it was what they were making or if there were different costs or overhead costs associated with different products. We just said there's one single overhead rate and we're going to apply that single overhead rate either based on direct labor hours, or some percentage of it, of direct labor costs. So why did we use direct labor? Well, that information was already being recorded. It was a large component of our product costs, and managers believed direct labor and overhead costs were highly correlated. They affected one another. There was a relationship there. Well, today, direct labor may no longer be a satisfactory base for that type of allocation, for this plant-wide overhead rate, one rate of overhead for every single thing you make. Why? Because companies sell a large variety of products that consume differing amounts of overhead. As a percentage of total costs, direct labor has been shrinking and overhead has been increasing. Many of these growing overhead costs may not be directly related to direct labor, like they were in the past, or felt they were in the past. Technological advances have reduced the cost and complexity of gathering diverse sources of data, so it's more easier to collect information about overhead, about specific products, where before it wasn't. So a plant-wide overhead allocation system may not be optimal for many companies in today's business environment. We're not saying they still don't use it. We're just saying maybe there's something better out there. So many companies have a system in which each department has its own overhead rate. The machine department has its, the assembly department has theirs, the shipping department. And the allocation base depends on the nature of the work performed in each department. So in the machining department, overhead may be based on machine hours, but in the assembly, it may be based on direct labor hours. Departmental rates will not correctly assign overhead in situations where a company has a range of products and complex overhead costs. So if you have one product, well, great, use that. But what if you have many different kind of products and they don't relate to one another? You know, you make a TV and, exercise equipment. The departmental approach relies exclusively on volume-related allocation basis, while some overhead costs may be caused by factors that are not related to the amount produced. Activity-based costing is required to account for these other factors. So the traditional one overhead rate, even in the department or the plant, is being replaced by activity-based costing. Activity-based costing, or you'll hear it referred to as ABC, and I remember when it was first being introduced, and it was actually the, I don't want to say the inventor, but the creator who gave this presentation. It was back in the 1990s I saw him at a seminar. It wasn't local in Pennsylvania, but it might have been in Philadelphia. But he was promoting this. I think it was like 1997, and it was very new back then. 20 years later, and this is a chapter in our book, a number of allocation bases are used for assigning costs to products. That's the key. How do we determine these? First, we need to find cost objects. Products, customers, okay? Something, and this is on page, cost product. I'm going to find that. Give me a second here. Oh, page 124. You can see cost objects. It could be a customer. It could be a product. Okay, so you can see there's a shirt. There's a skirt. There's a pair of pants. There's a pair of shorts. Okay, so that's the cost object, something we want to find the cost for. Then we need to look at the activities. So the activities are the events that cause the consumption of overhead resources. So what kind of activities will contribute to overhead? They give some examples on page 124. Setting up machines for making the product. Admitting patients to a hospital if you're looking at customers. Scheduling production, performing tests, billing customers. So each little activity that contributes to overhead. Each one of these activities will have what we call an overhead cost pool, the consumption of resources. Okay? And those end up being the cost. So an activity is an event that causes the consumption of overhead resources. And there you go. Setting up the machine causes overhead. Admitting hospitals patients causes overhead. Billing customers. Opening a bank account. All of these activities contribute to the overhead of a cost object. We then create a bucket, a cost bucket. That's our activity cost pool. Which costs related to our particular activity are accumulated. What kind of costs are there in admitting a patient? What kind of costs are there for setting up machine? What kind of costs are there for billing customers? Each of those will go into their own bucket. Then we have an activity measure. This shows us how much of the activity is carried out and is used as the allocation base for applying overhead costs. So how much do we expect how many times do we expect to set up a machine? How many times do we expect to admit a customer or a patient? How many times will we be performing blood tests? Our estimate. And then we would determine an activity rate by taking what's in that bucket and dividing it by our expected activity. And that gives us an activity rate for that activity that contributes to overhead. For each activity in isolation, so by itself, this system works exactly like the job order costing system. So it's a predetermined overhead rate is computed for each activity and then applied to the jobs and products based on the amount of activity consumed by that job or product. But it's not one predetermined overhead rate for everything. And that's the key. We're breaking the plant or the department down into activities and then determine a predetermined overhead rate for each activity. So how do we design this? Well, this is the challenge. It's to select a reasonably small number of activities that explain the bulk of your overhead costs. So it's a process. It's not going to be a day talking to managers. You're going to have a team in your company, if you're deciding to take this on, from interrelated fields, come together and determine the activities that need to be defined as your activities that contribute to overhead. And you want to try to get a small amount as you can, because you don't want a whole bunch of activities out there for determining overhead. So how do you do that? Well, related activities are frequently combined to reduce the amount of detail in record keeping. For example, several actions may be involved in handling and moving raw materials, but we may combine them all and just call them material handling instead of handling material, moving material. Everything's together as one. So an activity dictionary defines each of the activities that will be included in the activity-based costing system and then how the activities will be measured. So as a group, you have to define that. And that's the hard part of creating the activity-based costing system. Now, there are a hierarchy of activities, and usually your activities fall into one of these categories. For instance, unit level. Unit level activities are performed each time a unit is produced. Okay, so some examples. Processing units on machines, processing units by hand, consuming factory supplies are some of the activities for a unit because these are performed each time a unit is produced. How much time? How many units are on the machines? How many do we have to process by hand? Okay, so how would we measure these? Machine hours, direct labor hours, or units produced. Batch level activities are tasks that are performed each time a batch is processed. Examples of this are processing purchase orders. So it's not a specific unit, it's you're doing purchase orders for an array of items. Processing production orders, setting up the equipment to produce an array of items, handling materials, and then how we can measure that activity. The number of purchase orders processed, the number of production orders processed, the number of times we got to set up the machines, the pounds of material handled. These are some common activity measures. Then there's the product level activities. And these are those activities related to specific products and typically must be carried out regardless of how many batches or units of the product are manufactured. For instance, testing new products, maintaining parts and inventories, designing products. So this is for a product level overhead. Maintaining inventories of parts. Okay, there I said that. Issuing engineering change notices to modify a product or to meet a customer's specification. Developing special test routines when a product is first placed into production. So these are product level. So unit level is a specific product. Product level is a group of units. So the number of hours of testing, number of part types are an activity measure, and the number of hours of design time. And then finally, there's the facility level. So these are activities that are measured organization-wise or factory-wide. It doesn't matter how many products are produced, how many batches are run, or how many units are made. you're going to have facility level costs, such as management salaries for the factory, insurance for the factory, property taxes for the factory, depreciation of the building. Okay, so these are your general levels of activity that you want to look at when designing the system, and some common activities and ways of measuring the activities. So here's an example. There's various manufacturing overhead costs. So your first stage, cost assignment. Labor-related pool, machine-related pool, setup pool, production order pool, parts administration pool, and general factory pool. So remember, you want to have buckets. Those are your cost buckets, your cost pools. From there, the second stage is how will you allocate each of those pools, and what type of level of activity are they for? So labor-related pool and a machine-related pool could be measured by direct labor hours or direct machine hours, and that's considered a unit level activity. Setting up the machinery and creating production orders are considered batch level activities, and the number of setups and the number of production orders would be the way to allocate those. The overhead associated with the parts administration pool are a product level pool, and that is the number of part types could be the way to allocate those costs. And then the general factory overhead pool could be machine hours or direct labor hours, and these are facility level activities. So each of these contribute to a product's final overhead amount, but they're being measured differently because of the category they're falling into. It's just not one large overhead rate or one overhead rate. So here's an example. Say your production order pool was $450,000. So that's how much it costs to make the production orders. And you're expecting 1,200 orders. That would be $375 per order. So let's go to an example. See this whole thing come out. Comtech makes two products, GPS systems and phone systems. The company has been losing bids to supply GPS systems to lower priced competitors. The company has been winning all bids to supply phone systems. Now, they want to know why. Because their phone system isn't usually the good seller. It's usually the GPS. That's where they focus a lot. For the current year, Comtech has budgeted sales of 50,000 phone units and 200,000 GPS units. You could see there. Comtech uses a traditional cost system and applies manufacturing overhead to products based on direct labor hours. Both products require 2 direct labor hours to complete. So if they make 50,000 phones, 2 hours, that's 100,000 hours. If they make 200,000 GPS units at 2 hours each, that's 400,000. So their total direct labor hours are 500,000. Their direct materials are as listed. And this is in your book. If their total manufacturing overhead costs for the year are 10 million, plant-wide manufacturing costs, 10 million, and it's a total of 500,000 direct labor hours used, they're applying direct labor hours at $20 per hour. Now, let's go to the phone. The phone unit has direct materials of 90, direct labor of 20. And if there's 2 hours of direct labor hour, we're going to apply the overhead at $20 an hour for $40. So according to traditional costing methods, it costs $150 to make this product. Contrast to the GPS system. Their direct materials are 50, $20 for direct labor hours, and then we're applying the overhead based on that predetermined overhead rate, plant-wide, of $20 per hour, and it also requires 2 hours of direct labor hours. So the overhead applied would be 40 also, resulting in a cost of $110 under the traditional system. Let's compute the activity rates for an activity-based costing system now. Let's go back to Comtech. Comtech has a project team, an activity-based costing project team. And through their investigations and interviewing, they've come up with, as a team, the following. They've determined that $10 million of overhead can be allocated or put into different buckets of activity. Labor-related, $800,000. Machine-related overhead, $2.1 million. Machine setup overhead, $1.6 million. The production order activities usually cost $3,150,000. The parts administration, $350,000. And general factory overhead costs $2 million. So that's our first step. Break that overall manufacturing overhead down into activities. Then determine how much expected activity you will have in each of these categories. So labor-related activities are defined by labor hours. We've already said 500,000 in total, 100,000 related to the phone, 400,000 to GPS. The team further developed, we're going to have machine-related manufacturing overhead for the production of these phones. We're going to measure the cost in terms of machine hours. The total machine hours are expected to be 1,300,000 for the phone, 700,000 hours for the GPS. The machine setups, we expect those to cost 1.6 million. We'll measure those for how many times we have to set up the machine. They expect to set up the machines 4,000 times in total. 3,000 of them will be for the phones and 1,000 for the GPS, production of those items. Production orders will cost about $3,150,000 and will allocate their activity based on the number of orders. 1,200 overall, 800 for the phone, 400 for the GPS. The parts administration will cost $350,000 and they'll be allocated based on the number of part types. There's 700 in total, 400 attributed to the phone, 300 to the GPS. And then finally, general manufacturing overhead, that's also going to be applied based on machine hours, which we've already defined as 1 million in total, 300,000 related to the phone, 700,000 to the GPS. So this is the hard part. And this, you would be given this in your problem. Okay? Now it's up to us to now start allocating it. First of all, the way we will determine an activity rate is we will take the cost of that activity, for instance, labor-related activity, and divide it by the total labor hours. So each direct labor hour will be charged overhead of $1.60. Machine-related activities will be allocated based on machine hours. So 2.1 million is the expected overhead related to machine-related costs. 1 million hours will be used by both combined. So $2.10 per hour will be that overhead activity rate. Machine setups will cost 1.6 million. We divide that by the number of setups expected, 4,000. So the activity rate per setup is $400. Production orders, they will cost $3,150,000. There'll be 1,200 of them in total. So each order will have manufacturing overhead associated with it of $2,625. Parts administration, that costs about $350,000. There's 700 different parts. Part types, I mean. So each part type, $500. And then finally, our general factory overhead will be allocated based on machine hours at $2 per hour. So now we have an overrate per the type of activity. So that's our second step. The next step. Now we could determine a product cost. Now, let's see how much overhead is associated with each phone. The labor-related activities for phone is expected to be 100,000 hours. So 100,000 hours times the activity rate of $1.60, the manufacturing overhead related to labor, 160,000. Machine-related overhead. We expect to use it for 300,000 hours, machine hours. The rate is $2.10, as we just determined, so the overhead associated with the machine hours is 630,000. Machine setups. We're expected to set up the machine 3,000 times related to phone units being produced. That's charged at $400 per setup, or $1.2 million of the overhead is allocated to the phones in that activity. Production orders. The phones are expected to have 800 production orders. They're charged at $2,625 per order. So the production orders for phone units in total will be $2,100,000 of overhead. Do the same thing with the parts. The expected activity for part types is 400 times $500 per activity per part type. $200,000 is the cost associated with that overhead activity. And then the general factory overhead. The phones will use 300,000 of machine hours times a $2 activity rate, $600,000. So how much overhead should be allocated to each phone? Well, the total overhead will be $4,890,000, but that's to produce 50,000 phones. Divide that into the 50,000 into the 4,890,000. Cost per phone, overhead cost per phone that should be allocated, $97.80. We do the same with the GPS systems. Now remember, all we're doing here is allocating overhead. Direct labor and direct materials we could trace. But this is a different way of allocating overhead using activities. So you would do the same computation, but now using the activity level for the GPS units. Labor related, 400,000 times $1.60 that we figured out a couple slides ago. Machine related hours, 700,000 are expected for the GPS times $2.10 per hour, 1,470,000. Machine setups for the GPS unit, they're expecting to set up the machines 1,000 times $400 per setup. Production orders, they're expecting 400 of those being charged out at $2,625. So there's the overhead for that activity, $1,050,000. And you would do the same with the parts and the general factory overhead. Remember, we're doing machine hours. For the GPS, they use 700,000 of the machine hours times $2, $1.4 million. So the total overhead for the GPS units, 5,110,000. They're going to produce 200,000 units. So the overhead cost per unit for the GPS, $25.55. So two distinctly different overhead rates, one for the phone, one for the GPS unit, based on activity. In our old system, we just said one rate, $20 per direct labor hour. If you remember that from a couple slides ago. Much different. Now look what happens. Under activity-based costing, the phone units, $90 for direct material, $20 for direct labor hour. Manufacturing overhead, $97.80. So the true cost of a phone under activity basing, $207.80. Look at it from our old system. 90 for materials, 20 for direct labor. But if you remember, we determined an overall overhead rate of $20 per direct labor hour, and there's 2 direct labor hours associated with the phone. So it came up with $40. Look at that difference from old to this activity-based costing. Same with, the GPS. has direct materials of 50 and 20. That's the same for both, but the way we allocate that overhead by activity, you're drilling down and getting more specific and really assigning those costs where they need to be. Manufacturing overhead for a GPS is $25.55, which makes your unit cost, $15 less than under the old system. Okay, so that is why this method is being utilized. And, maybe I think they were saying like 30% of companies use this approach. It's expensive to get started, but in the end, it seems worth it, right? Especially for a company like this that's producing vastly different products. So contrast the product cost computed under both. We've already seen that, but we'll take another look. Here it is. Look at that difference. They are charging $14.45 more per unit as costs than they should be. They should probably be charging less for their GPS because it costs less actually to make using activity-based costing. They should be charging more for their phones because it costs more. Under the old system, it looks like it only costs under $50. So a low volume product, when a company implements activity-based costing, overhead cost shifts from high volume to low volume products with a higher unit product cost because there's less of that product. In the traditional sense, they're basing it on labor hours, which probably have nothing to do with the activities overall. And they're basically saying, it's the number of hours you work on something. Well, not necessarily, because you can see how dramatically lower these overhead rates are or higher than based on activity-based. So when you have more of a product produced in activity-based, like the GPS, or it's 200,000 of them, it's going to cause your manufacturing overhead per unit to be less, where the phones will be higher because they're only producing 50,000 of them. And that's what I was just talking about. Here, it's just direct labor hour, not really allocating how you should. Production orders activity cost pool divided by the ABC system assigns different amounts of product order related overhead costs to each product. That's not divided by. I don't know why I said that. Probably because the line was there. So production orders activity cost pool. So this is a batch level cost pool. We talked about this. So the ABC system assigns different amounts of production order related overhead costs to each product. This fact can be illustrated in a two-step process. Number one, compute the number of units processed per production order for each product. So the number of units produced per year are listed there. How much are actually produced per production order? Well, 800 phones, 400 GPS. I'm sorry, how much production orders are there per year? 800 for the phones, 400 for the GPS. So how many units are processed per production order? That's what I was getting to. 50,000 are the total number of phones. There's 800 production orders, so that means 62.5 are processed per production order. The GPS units, there's 200,000 units, 400 production orders related to that, so there's 500 units per production order. So this is just another way of allocating overhead, even to drilling down and even getting more specific and allocating it even better. Compute your production order cost per unit. So we already did that, $2,625. Now, take the average number of units processed per production order for each phone and GPS, and now come up with a production order cost per unit. Now look at that. Notice the costs are being shifted from the high volume to the low volume phone. So this is just showing you that GPS could be even less expensive to make overhead-wise than the phone unit because there's just so many more being produced. An ABC system can help identify areas where the company can benefit from improving its current processes, right? It focuses on managing activities to eliminate waste and reduce delays and defects. So the first step in any improvement program is deciding what to improve. So we have activity rates can be used to target areas where costs seem excessively high. And then we could use benchmarking. This can be used to compare activity cost information with world-class standards of performance achieved by other organizations. So we can use these types of activities to help us improve our program, our ABC costing system, and our processes. Some of the major benefits of activity-based costing, well, you've seen some of them. Increasing the number of cost pools used to accumulate overhead costs, and it improves the accuracy of product costs from that. It uses activity cost pools that are more homogeneous than departmental cost pools, so their like activities are grouped together and the costs associated with them. Assigning overhead costs uses activity measures that cause those costs, rather than direct labor hours that may not cause those costs to begin with. We saw all the different things. Production orders was a measure of an activity. Machine hours. I think one item was used direct labor hours. And then activity-based costing also highlights activities that could benefit most from process improvement efforts. Okay, so there are some limitations, of course. The cost of implementing it may outweigh the benefits. However, the benefits are more likely to be worth the cost when you have products that differ substantially in volume, batch size, and in activities required. So not all companies can benefit by using this. If you basically produce the same kind of product all the time, it may not. Conditions have changed substantially since the existing cost system was established. Overhead costs are high and increasing, and no one seems to understand why. So this might be an activity-based system is for you. And management doesn't trust the existing cost system, and it ignores data from it when making decisions. Well, that's not good. So maybe an activity-based costing system is for them. It may be worth the cost because remember, it's going to take time and manpower, a team effort to create the system. But once it's in place, wow, right? Critical assumption here. The cost in each activity pool is strictly proportional to its activity measure. When this assumption is violated, the accuracy of ABC data can be called into question. For example, managers should be particularly alert to product costs that contain allocated facility level costs. So they want to make sure, is that activity causing that cost? So the illustration in the chapter assumed that ABC is being used for external reporting purposes. If the system is used for internal decision-making purposes, two important modifications should be made. Selling and administrative costs should be assigned to products where appropriate. And facility level costs should be removed from product costs. So and this is on page 136. So let's just take a second here. So the illustration assumed ABC is being used for external reporting. If the system is used for internal decision-making purposes, we got to modify our model. Selling and administrative costs should be assigned because we want to know a total cost of our product. We just don't want to, what we're saying here is that when we're making our income statement, our cost of goods manufactured, if we're using it for that purpose, for external reporting, when we are using it for internal decision making. How much does our product really cost us? Well, you got to assign some of these selling and administrative costs. So that you properly price it. Okay. Now, also, facility level costs should be removed from product costs when making decisions. Okay, so because generally these level costs are items that would need to be paid for anyway, and that's basically how your text is looking at that facility level costs. Okay, so it's just 2 items to keep in mind. So that concludes our discussion of activity-based costing. Just another way to determine manufacturing overhead for a product, which occurs in steps. It's really good for companies that have a wide range of different types of items and produce them at different volumes. Instead of using one plant-wide or department-wide overhead rate like we saw in Chapter 2, we break down the overhead by activity and apply it based on the amount of activity used by a particular product. Okay, so if you have any questions on that, please post it to the discussion board.